This is the Global Economic Scrap Metal Commodities and Recycling Report by BENLEE Roll-Off Trailers and Lugger Trucks, November 19, 2018. Last week, commodity prices and economic reports were mostly mixed. U.S. steel production fell slightly, remaining high as tariffs continue to support higher demand and prices, as well as on good U.S. demand. Oil fell about $3 a barrel to $56.46. During the week, oil hit a record in the number of days prices dropped. OPEC increased oil production at the U.S.'s request due to the U.S. demanding all countries stop buying Iranian oil. When India told the U.S. they would not stop buying Iranian oil, the U.S. agreed to allow them and 7 other countries to buy it, so markets became oversupplied and prices dropped. This drop will help lower November's inflation. U.S. oil production rose to 11.7 million barrels a day, a new all-time record, as technology continues to help U.S. oil producers lower costs. Great news for the U.S. Iron ore was no change at $75 a ton on a good balance of supply and demand, and as global steel production continues to grow slowly, so demand remains good. Scrap steel #1 heavy melt rose a bit to $333 a gross ton as demand stays solid. Many scrapyards sell limited amounts of scrap in December for tax planning purposes, which could put upward pressure on December prices. Hot-rolled coil steel remained near the multi-year high of $1,085 a ton as tariffs, including from Mexico and Canada, continue to protect U.S. steel mills and demand stays pretty good. Copper rose 12 cents to $2.80 as markets are nervous about tariffs and a global slowdown, but some remain optimistic. The 5-year copper chart shows prices remaining off the recent high on all the global uncertainty. Aluminum was down a penny to 87.2 cents after hitting a new 1-year low during the week on market uncertainty and a slowdown in housing and automotive markets. GM and Ford announced that tariffs on steel and aluminum will cost them each $1 billion in higher costs this year, which they are mostly passing on in higher prices. Related, BMW is the #1 exporter of vehicles in the U.S., including they ship their South Carolina-made SUVs to China. Some of this U.S. BMW production is now moving out of the U.S. to avoid Chinese tariffs on U.S.-made goods. Japan, the world's 3rd largest economy after the U.S. and China, had negative growth in the 3rd quarter, a bad sign for the global economy. Germany, the world's 4th largest economy, also turned negative for the 3rd quarter. This, along with Japan's negative growth, will keep downward pressure on commodity prices. October's U.S. federal government deficit was $100 billion versus $63 billion last October. Spending increased 18.3%, while incoming receipts only increased 7.4%. This means the government borrowed $100 billion last month, so it increased debt by $100 billion, which puts upward pressure on interest prices due to the increased government borrowing. October's U.S. industrial output edged up 0.1% from September. Manufacturing output actually rose 0.3% for its 5th consecutive month of increases, while mining and utilities declined 0.3% and 0.5% respectively. October's U.S. inflation rose a big 2.5%, mainly driven by higher fuel oil and gasoline rates, which could reverse in November with the historic drop in oil prices. This puts downward pressure on interest rates. October's U.S. retail sales rose a strong 0.8%, the largest increase since May, mainly boosted by purchases of vehicles and building materials amid the efforts to rebuild areas affected by Hurricane Florence and on energy on the back of the higher gasoline prices. The Dow Jones Industrial Average dropped a big 576 points for the week to 25,413 as interest rates continue to rise and tariffs are putting downward pressure on earnings. Dow is again this morning. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.